down from the sky. Approximately 350 miles away, Mount St. Helens had finally blown her top. For weeks, people who lived nearby the mountain had been warned to evacuate. Most people listened, but sadly, 57 people lost their lives. This was the largest volcano explosion in U.S. history, pouring ash for 9 hours, leaving behind 550 million tons. What a mess on our hands. I'm sure my parents had anxiety, uncertain what to expect. We went inside the house to listen to the radio just to see what the news was saying. This was similar to snowstorms that we experience often in Spokane, but a fluffy ash storm in May. Officials closed everything down, fearing how this ash would affect people's lives, their overall health, and their lungs particularly. After 1 week, most businesses began to reopen, but schools remained closed for 3 weeks. We had to stay indoors, which was even worse. 40 years ago, think back, there was no internet, no cell phones, Zoom meetings, FaceTime meetings. We had just old-fashioned TV, radio, and party line phones to check in on one another. Sound familiar? COVID-19 caused officials to make decisions that we had never dealt with before as well. It seems like a long time ago. We have had stay-at-home orders. We now that things are reopening again, we have to wear masks, we have to wear gloves, we have social distancing that we need to deal with. We've all been in this together, the new normal. Today, I'm going to be sharing with you 3 ways you can take back control of your financial future. I'm Melissa Matson, and I will be your host today. I've been a financial fiduciary for over 20 years and have helped hundreds of families to create successful retirement plans that last their lifetime. I have a security and insurance license, and our office, MRS Wealth Advisors, is located in the heart of Green Valley here in Henderson. Most likely, this is not your first webinar, and some of you on this session are current clients of mine, and I want to thank you for attending. Distractions are normal. If your next Amazon order arrives and the doorbell rings or your dog barks, don't you worry, you're muted. But I encourage you to grab yourself a pen and a notepad because I'm going to be sharing with you some need-to-know facts you're going to want to write down. Okay, so let's get started. All right. We always have to share this short disclosure page, basically letting you know that investment advisory services are offered through Melissa Matson, LLC, an SEC registered investment advisory firm. Insurance services are offered through our company, MRS Wealth Advisors, but I'm not a CPA nor an attorney, but I am a fiduciary financial advisor. And the information being shared today is for educational purposes only. I would hate for you to go implicate something and you not get the desired results. So you want to sit down with a financial professional to see if any of the things that we talk about today make sense for you. So let's jump in here. We're all gathered here because the past 3 to 4 months have been unprecedented. From a global pandemic sparking a historic market crash to government mandated stay-at-home orders, none of us could have seen a 2020 quite like this. It left many of those we've been talking to lately feeling a lot like unsure of exactly what to do next. If that's you sitting there right now, if you're wondering what to do, I want to let you know you're not alone. Waking up every day to try to make sense of everything you see, you hear can be completely daunting right now. When it comes to your financial future, knowing the right moves to make can be even more puzzling. So before we really get into the meat of today's presentation, I want to let you know about an opportunity. Some of you on this session today likely registered just because you'd like to get some questions answered. And if that's you, this opportunity is for you. On the screen, you'll see an icon coming up. If you'd like to set up a 15-minute phone consultation, do nothing more than to get your most pressing questions answered, we're freeing up several calendar slots to allow you to do just exactly that. We've been flooded with individuals calling for information over the past several weeks, and that's why we're here, to provide you with answers. So as you see that icon pop up, just simply click on it if you'd like to grab one of those slots. What's going to happen during that consultation, you ask? Well, as soon as you click on that icon, you're going to get immediate access to my calendar and a 15-minute slot. And we're simply going to give you a call at the number you provide, and you can let us know what's on your mind. Whether you're concerned with preserving your assets, or you've recently lost your job and you have questions about what to do, or whatever your concerns might be, we'd love to help address your concerns. And that time is yours to use however you'd like. If you feel an in-depth meeting with us is more beneficial, we can certainly set up a time for that at the conclusion of that phone call. So again, we're going to put this up a little bit later as well. Let's get started by looking at today's agenda. Over the next 35 minutes or so, we have 3 main points on our agenda. First, we want to take a look at where we are right now, financially, as a country, and how we got here. Second, while none of us have a crystal ball, we want to take a moment and see where things could go from here based on key indicators. And these are the ones you're going to want to make a note of. And finally, we want to look at what each of you can be doing right now to help take back control over your financial future, no matter what happens in the days ahead. I don't know about you, but it seems many people have grown pretty darn tired of things feeling out of their control. Whether it's being confined to your living room, been kept home from your job, or told when and where you can shop, people have grown increasingly done with being told what to do. So I'm excited to share with you some things you can do and be able to pull back the reins when it comes to your financial situation. Okay, so where are we right now? Question number 1, financially speaking, how did we get here? Without getting into the weeds, I think it's important that with everything that's happened, we just take a few Cliff Notes approach to summarizing how we got where we are today. The story, of course, began December 8th, 2019, when a resident in Wuhan City, China, was found to have symptoms of this unknown coronavirus. Wuhan is the capital city, largest city in Hubei province in the People's Republic of China, with a population of over 11 million people packed in it. So the virus spread quickly, right? We all know these things. Fast forward from December 8th to March 9th. And we can find the impact of the virus here domestically. While even looking at this calendar may feel like a decade ago, it was actually just 3.5 months ago that this all began here in the United States. With investors worried about the impact of COVID-19, the stock market crash of 2020 began on Monday, March 9th. With history's largest plunge for the Dow up to that date. On March 11th, the World Health Organization officially deemed COVID-19 a global pandemic, and the market then experienced 2 more record-setting point drops on March 12th and March 16th. So make a note of that. In fact, March 16th marked the single fastest drop in the Dow in history, falling 2,997 points, or 13% in one day. Over the course of just 22, write that down, 22 trading days, the S&P fell 30%. To put this in perspective, a retiree with $1 million invested for retirement, had they been invested just directly in the S&P, that would have been down to $700,000 in just 3 weeks. Hundreds of thousands of dollars that likely took years, if not decades, to accumulate would have been gone in less than 1 month. Now that could cause some anxiety. While market corrections or declines of 10% or more are certainly common, market crashes of 30% or more are a little less so. And we've never seen one happen as quickly as we just did in March. If we look at this graph showing data from Bank of America Securities, we can see that the second, third, and fourth quickest 30% drops on Wall Street ever all occurred during the Great Depression era in 1934, 1931, and 29, respectively, when the Dow actually plunged a total of 89%. 20%. Okay, so that's a snapshot of how we got here. But what else are we seeing? Well, you don't have to look far, right? We've all had plenty of time to see a lot. Whether you're reading your emails, turning on the TV, which is on 24-hour news, or scrolling through your phone, every headline for the past 3.5 months has been about getting some type of impact, how this virus is having on our economy. And while we're actually wise not to trust everything the media puts out there, there are a few variables that serve as a good barometer of things to do right now. The first is a staggering number of people who have just lost their jobs in this crisis. As of June 2020, real unemployment rates are now up to 20%, with over 26.5 million Americans having lost their jobs. Over 20% unemployment? Consider that for just a second. That's 1 in every 5 work-eligible Americans without a job. And that statistic has other ramifications as those individuals grow unable to make mortgage payments and pay on small business loans, taxing the banks and lending industries. Okay? Other industries have had major hits. This was what many hotel lobbies looked like just a short month ago, having all been shut down, looking much like this. Most lobbies do not look this way any longer since the reopening of the economy. In fact, there are placements every 6 feet apart on where we can and cannot stand, with all these social distancing requirements now in place. The estimated toll in the hospitality industry has been estimated to be 1.4 billion a week that was lost. Even the proposed $50 billion bailout for U.S. airlines is not anticipated to come close to covering their lost revenue, as thousands of planes just sat idly at the gates everywhere, and slowly they're getting back in the air. Overall, a recent Reuters article reported that global airlines estimate their 2020 revenue losses to exceed $250 billion. The retail industry has been incredibly hard hit, with hundreds of thousands of merchants that had to close their businesses. Now they began to reopen, but it's going to be very difficult to catch up with sales. In the US alone, our retail industry is normally responsible for contributing roughly $2.6 trillion or 25% to the annual GDP, a number that will obviously be far behind as the curve finally flattens. So knowing where we are and how we got here, the second question is, where could we go from here? Financially speaking, this is a question we've been fielding a lot lately, and it's really no wonder because it's on everyone's mind. The reality is, if you ask 5 people right now what the market is going to do, you get 5 different answers, because the truth is, no one really knows what's going to happen. If you ask Alexa or Siri the weather forecast, the quickest driving directions, they're both pretty accurate. But if you ask either of them a financial forecast, you're going to hear them say, I don't find anything on that. And frankly, anyone telling you that they know what's going to happen, you may want to get a second opinion. So rather than give you some best guess or pretend that I have a crystal ball, let's just look at the facts. First, on top of everything else we have going on, maybe some of you forgot we're in an election year. What does it mean to you? Well, there's something called the Volatility Index, or the VIX. It's a real-time market index that represents the market's expectation of 30-day forward-looking volatility. Forward-looking. And as you can see here, since the year 2000, the VIX has been noticeably higher in election years than non-election years. So even if we hadn't had a global pandemic or a market crash, record-breaking unemployment, major impacts to most every major industry around the globe, we could have already anticipated higher volatility in the market this year. And I wouldn't be surprised to see that volatility continue. The second indicator to look at is actually another date on the calendar, March 27th. Anyone know what happened on that date? Well, that was the day the historic CARES Act was signed by President Trump, putting $2.2 trillion of stimulus money into our economy. And while there's been some debate on exactly how those funds are being doled out, here's what's not up for debate. Those funds were essentially an emergency loan from the government. With the US already having a $24.2 trillion national debt, tacking on another 2.2 trillion can generally only mean one thing. Taxes will have to rise at some point in the future. We were already expecting this. All of us are going to have to pay up to cover what was borrowed. While this may not have immediate implications for you, it's something we'll return to here in just a few minutes. The third indicator to keep an eye on is unemployment. Unemployment is anticipated to continue to grow from its current level of just about 20% to as high as potentially 32.1%, or 47 million Americans, according to the recent Forbes article. That's 7% higher, folks, than this country experienced in the Great Depression. 47 million people, that's roughly equivalent to all the residents in New York, Florida, and Colorado combined. The fourth indicator to consider is the possibility of a recession. The National Bureau of Economic Research defines the recession as a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale and retail sales. So given this definition of a recession, we're already almost there. The final indicator to keep an eye on is what typically happens to interest rates during a recession. When an economy enters a recession, demand for liquidity or access to people's money increases, but the actual supply of credit available from lenders decreases, which often result in an increase in interest rates. Therefore, it's very likely to see us rise out of this historically low interest rate environment we've been experiencing for some time now, and believe that they're going to be going up in the future. Just ask Alexa. So in summary, while none of us can predict the future with absolute certainty, we can, with high probability, anticipate that we'll see continued volatility in the markets. We can expect taxes to rise as the government needs paid back for what it just offered us in stimulus money, and many people believe unemployment could continue to rise another 5 to 12%. We're already teetering on a recession, and recessions generally result in interest rate hikes. A rosy picture, right? So let's look at our third and final question, the one that matters, and that is, what can you do right now to help take back control of your financial future, no matter what happens? In a time in which so much feels outside your control, the reality is that your finances and the retirement you've spent a lifetime preparing for don't have to be. Those things actually can be controlled. As we think about these next ideas, I'd like you to consider a question. In fact, I'll even ask you to respond here in a second. The question is this: in times of a crisis or emergency, do you consider yourself the kind of person who tends to freeze and panic and just let things happen to you? Or are you more the type to step aside, gather yourself for a minute, formulate a plan, and take action? I ask these questions because in times of crisis, those are the primary ways to react, right? And in a time like we're currently experiencing, many people are obviously worried about making the wrong move. So the truth is, many people, the wrong move may be to simply do nothing. Procrastination is a tough habit to to overcome. So we're going to take a poll here for a second. So go to your tab bar and click on poll. And I'd like to see if you're the kind of person that freezes and tends to panic, or if you're the kind of person to formulate a plan. So just click on your tab and click on the poll there. And let's just see, it'll present for all of us to see. With everything that's going on, and so much information coming at us from all different directions, which I think all of us would agree is overwhelming. You can either sit at home, frozen, waiting for things to happen, or you can decide you've had enough of that and you can plant your heels in and make things happen. So let's talk about the 3 concrete actions that you can take right now to not only help protect your financial future, but actually take advantage of the current circumstances. Because believe it or not, the current environment actually creates opportunity that you should be thinking about. The first action step you can be taking right now to take back control of your financial future is to help ensure your financial foundation is secure. I don't know that there's anything we could be talking about that's more important for most of our clients than this. So be sure you're listening in this next 2 to 3 minutes. For years now, when new clients have walked in our doors, Lynn, Mark, Debbie, I see that you guys are all on the call. We visited with them about different parts of their fiscal house or their financial house. It's just like when building our physical house. When building our fiscal house, it's absolutely critical that we get one thing straight and solid. That one thing, of course, is our strong foundation. That is where the effort is put, and it takes time to make sure we know what's most important for you. We cannot rush through this step. Several of you on this webinar may have built a home before, and as far as excitement goes, unless you just like staring at concrete, foundations are about as boring as things to come. They're just several walls of cement poured several feet deep into the ground, reinforced with rebar and metal. Not exciting, but they're absolutely critical because on top of the foundation, everything else is built, right? So those fancy granite countertops we love, those amazing master bathrooms that we love to create, those things don't matter if the foundation of our house caves in. The same is true of your foundation in retirement. In retirement, the equivalent of your boring foundation is your income. For 30 or 40 years, the vast majority of you have been receiving regular paychecks. And once you're in retirement, that responsibility of manufacturing those paychecks falls on you. And when it comes to their physical paycheck in retirement, the last thing most people are looking for is excitement, wondering if it's going to happen. Instead, they simply want consistency and predictability. Would you agree with that? Of course. Once in retirement, no one wants to find a crack in their plan. This could show up in a number of different ways. It could look like a significant loss in the market that might impact the amount you can actually take out to create your income. Or it could look like paychecks that simply don't keep pace with inflation over time. Or it could look like a stroke or other significant health event that requires you to tap into a large portion of your assets and completely derail your plan. But the bottom line is generally the same. You get one shot at retirement, and nobody wants a big surprise when it comes to their income. Predictability is key. So let's pause here to ask a question. Those of you with me today, do you have a written retirement income plan? Some of you may be thinking back to your last annual review. In the chat box, say, yes, I do, or what's that? If you think of your last annual review with your financial advisor, going through your statements, and then you faithfully file them away, let's be clear, something like this is not a plan. And frankly, if you feel like you need an interpreter to understand it, that really isn't a plan either. Think about the plans many families establish with their kids. We have one. If there's ever a fire in your house, our family's plan is simple. It doesn't require someone from NASA to try to explain it. Basically, it's so simple. It's you're going to get out through this hallway, turn left. If that's not an option, you're going to get out through the window. We're all going to meet at the end of the driveway. Plans are meant to be simple and understandable because that's how you need them to be when you really need your plan, right? A true retirement plan is just a few concise pages in simple English, and they should answer these 5 questions. 1, it should tell you exactly when the paychecks you create for yourself in retirement will begin, which pocket of money you'll be tapping into. 2nd, it should tell you in what order you'll be tapping into these pockets or buckets of money, because that's very important. And 3rd, a good retirement income plan won't just stay static, because the cost of goods don't stay static either. So it needs to grow over time. 4th, it should have built-in provisions for what should happen if you or your spouse should become incapacitated or need long-term care. And finally, this is perhaps the greatest question we can help you address. It should mathematically show you exactly how long your money will last, regardless if the market crashes or there's more global pandemics. No matter what happens, how long will your money last? Now, if you're sitting there saying, if this kind of thing is possible, why don't I have one of these? Why haven't I ever fully understood my plan or had this kind of reassurance? If that's you, I have 2 pieces of encouragement as we wrap up today. First, you're not alone. Believe it or not, the vast majority of those we visit with week in and week out have been working with a financial professional for years without having a true written retirement income plan. We see it all the time. So don't think for a second you're the odd one out. This is incredibly common. And second, it's not your fault. I want you to hear that loud and clear, because here's what I do know. I know at some point in most people's lives, not knowing exactly how investing and planning for retirement works, they made a brave and bold decision. You likely did that too. They picked up the phone, called someone for help. And if you did that at some point, then hear me here. I want to commend you because you took action, and you likely wouldn't be here if you hadn't. The fact that no one has created a written retirement income plan for you is not your fault. Several financial professionals just don't really specialize in this part of the game. It doesn't mean they're bad. Many of them are great at helping you accumulate to retirement. It's just that when you get there, you want to make sure you've got someone looking at things who specialize in helping you get through retirement. Many of you on this webinar have taken action and are confident and secure in your written income plan we've created and implemented together. At MRS Wealth Advisors, we believe that is really important. So our first action item for you is to get a written retirement income plan following today's session. This plan does all 5 things we just mentioned in just a few short pages. And best of all, is easy to read layman's terms that you can understand at all times. What does that really mean to you? It means you can finally put to bed a concern that could be the greatest of all. Do I really have enough? We will have mathematically tested this for you to ensure how your plan is going to work out. The second concrete step you can take right now is to figure out when it makes the most sense to start claiming your Social Security benefits. Why is that important to you now, when Social Security has nothing to do with this current economic crisis? Because a Social Security analysis is a key part of a well thought out retirement income strategy. Social Security was designed to provide a portion of one's income stream. There are 3 ways your Social Security can be supplemented. The first way is through employer-defined plans. Unfortunately, these employers don't offer these traditional pension plans like they used to. It's dropped dramatically, leaving Americans far more responsible for creating a larger share of their retirement income. The second way to supplement retirement income is through work earnings. Many retirees choose to work long past the traditional retirement age. Or perhaps they retire from their careers and then take a job or launch a small business for extra income. In January 2019, a study showed that almost 40% of Americans age 55 and better are still working, the largest percent of workers in that age group since 1961. The third way to enhance income in retirement is through your savings and investments. Two traditional retirement income account options include maximizing contributions to your defined contribution employer plan, like your 401k, your 403b, your SEP, or maximizing your contributions to your Roth or your traditional IRAs. Today, the biggest story in Social Security concerns the substantial number of baby boomers set to retire over the next 10 to 15 years. And there's a relatively smaller, younger generation feeding the Social Security payroll taxes into this system. There's 13,000 a day retiring into the system. The pandemic has put even more strain on the system, with huge job losses leaving some older workers suddenly unemployed and scrambling to pay for basic living expenses. What's more, today's seniors are living longer on average. While that's great news, greater longevity does raise the possibility of increased medical and long-term care expenses in retirement. In addition to that, the value of your nest egg could be impacted by the cost of living increases over long-term care. Quite simply, you could outlive your savings. We can help you review possible payout scenarios for your Social Security to help determine the most appropriate time for you to begin drawing your benefits. The question isn't how to beat the system, but rather how to potentially optimize the amount of income you're eligible to receive for the length of time you need it. Then we can help you to identify the income gaps and discuss strategies to help reduce the risk of you running out of money, including insurance products such as annuities. So the second concrete action you can take to get a no obligation Social Security analysis that's customized for your financial situation and retirement goals. If you don't do anything else today, if you don't even end up working together, the only thing I encourage you to do is to get a Social Security analysis so that you can have peace of mind to know when the right time to take your Social Security will be. The third and final action you can take right now to better protect yourself and your family is to find out whether it makes sense to incorporate a fixed index annuity or an FIA into your overall financial strategy. Fixed index annuities, or FIAs, are retirement saving vehicles that provide complete principal protection, meaning the money you put in them can never be lost to market downturns, and they also give you the opportunity for growth. Just like a traditional fixed annuity, an FIA is an insurance product often intended for retirement income purposes. However, unlike traditional fixed annuities, a fixed index annuity gets its name because it ties its annual growth to a market index like the NASDAQ or the S&P 500. Rather than offering a set or a fixed interest rate, a FIA's interest credit follows the performance of the market index to which it's tied. Because your principal is protected in an FIA. Should the market index go down in any given year, your account balance remains flat, unscathed for that year, and you simply receive zero interest. Should the market go up, you get to participate in a portion of those earnings. Now, you can't have your cake and eat it too, because an FIA will not provide you with 100% of the earnings of a rising market. Your earnings will be capped at a certain level and also be subject to spreads and early withdrawal charges. But that's the simple trade-off for knowing that money you put into an FIA will never be at risk again. Okay, so bring me full screen for a second here. It might help you to understand what an FIA is by thinking of it like this. Say you sit down at a blackjack table at a casino, and the dealer says, all right, here, this is the rules at my table. If you lose, I'm just going to shuffle this deck and I'm going to redeal. No chips lost. But if you win, get 21, you get to keep 50% of the stake. If a dealer told you that, how long would you sit at that table? All day, right? Because while you're not promised the moon, you're only promised half. Keeping half of your earnings, never losing a dime, all the upside potential with no downside risk. This is very much the premise of an FIA. I will tell you right now, people who own these today and through this pandemic, they have been doing cartwheels during this past few months, not worried about what the markets are doing. I hope that made a little bit of sense for you. So some of you on this call today may recognize this guy. This is Warren Buffett. And for the past 50 years, he's run Berkshire Hathaway, which is a holding company that owns the likes of Geico, Duracell, Helzberg Diamonds, and Pampered Chef. Warren Buffett is one of the most famous investors alive. And he's the fourth wealthiest person in the world, and his net worth is roughly $74 billion. And what does he have to say about where we are as a country? You can bet on America, but you're going to have to be careful about how you bet, simply because markets can do anything. He said this May 2nd, 2020. So none of us know what lies ahead, but the road ahead is likely to be bumpy for a while. And while tons of things right now are out of our control or out of your control, your financial future is not one of them. That, fortunately, is something we can help you with. In the midst of these crazy times, it's important that your assets are working for you and fit in with your retirement goals. As I've mentioned, we can create a written income plan so you can stop worrying about running out of money. We can conduct a no obligation Social Security analysis to see what portion of your nest egg is still at risk of further losses, and evaluate whether you might be a good candidate for a fixed index annuity. All of these are available at no obligation, and frankly, we just think they're important for you to have it done. Regardless of what comes next, please don't spend a moment longer wondering if you're going to be okay. Give us a call. Let us walk you through these issues together. These are the kinds of things we're used to dealing with every single day, and we can help you too. Go do something fun. Connect with your family online, or relax and try to find one movie or show that you haven't already seen in the last 3.5 months. Or if you've already binge watched every series on Netflix, well, turn the TV off, head outside, grab yourself something to drink, take a deep breath, and enjoy the little things we've all likely taken for granted. I know I have, but just remember this: there are better days ahead. And before we know it, we're going to be at a cookout with friends over the 4th of July. And at some point, ballparks are going to be open back up. The stadiums are going to open back up. The Rolling Stones will be back finishing their farewell tour. And everything is going to be okay. I hope you'll find time today to unwind wherever that might be for you. And to remember this simple fact: you are absolutely undefeated in facing the challenges life is throwing your way, and you will make it through this one too. Go ahead and bring me full stream. Again, it's been a real treat sharing this time with you today, and I believe that you deserve to hear the words, "You're going to be okay," whether from us or from someone else. We'd love to help you in any way we can. So as we close today, we'll keep this icon on the screen for a few minutes in case you need to look at your calendar to see what time works best for you. And, in the midst of the next few days, grab your time slot and we'll just have a quick 15-minute phone call. And we're going to talk about what's on your mind, any pressing concern that we can help you with, because you deserve to be in control of your finances. Thanks for joining us today. We appreciate it. Most people that come through my door, their biggest fear is, do I have enough money to last my retirement? What does that mean for me? Am I going to be able to leave any money behind for my family? That's where your concerns are dealt with in my office. The favorite part of my day is sitting down with clients just like you, listening to your story, listening to what your goals and your ideal retirement looks like. Building trust with you doesn't happen by me telling you what I'm going to do for you. It's by me showing you exactly what we can accomplish. So trusting each other that we are covering all the bases is absolutely number one. Because if I don't know everything that you're going through and experiencing, then how do I know that I'm creating a plan or helping you create a plan that's going to be successful for you? Our goal is to individualize every plan so that it's customized to your needs, your wants, your desires. But this plan isn't just never going to be changing. It's an ongoing plan for your future, your children's future, and we will have a relationship together for many years to come. By having a plan in place, it's like having a roadmap that helps you get to the destination that you've worked so hard to achieve. And you know you're going to be okay. Some people want to travel. Some people want to spend time with their family. Whatever your goal is, we want to make sure we help build a comprehensive plan together with you to take that financial burden and worry off your hands so you can go live the retirement of your dreams.